Have you ever watched a single ticker just climb relentlessly for days on end? You sit there watching the green candles stack up, and your gut starts screaming that it has gone up too much. Gravity has to take over. A massive drop feels absolutely guaranteed, so you hit the sell button to short the stock. And then you watch paralyzed as it just keeps climbing, draining your account balance dollar by dollar. If you look back at that chart, there were zero technical signals telling you to take that short. No moving average crossovers, no resistance levels hit. You clicked sell based entirely on pure intuition. This pattern repeats across the markets because of the specific way our brains process information. The human brain is a highly tuned ancient survival machine, but we are asking it to navigate a modern, highly unnatural financial ecosystem. Processing complex, constantly updating data points takes a massive toll on the body. It burns a tremendous amount of physical energy. To survive, the brain developed workarounds. It built mental shortcuts known as cognitive biases to bypass heavy processing and conserve that energy. Unconscious shortcuts kept our ancestors alive in the wild. In the markets, however, those same biological impulses lead to irrational feeling-based decisions. One of the most destructive of these mental traps for any trader is the gambler's fallacy. This is the deeply ingrained false belief that a random independent event is somehow influenced by the results of whatever just happened. Look at a standard coin toss. If you flip that coin and it lands on heads 5 times in a row, the brain desperately searches for a pattern. After seeing all those heads, your biology screams that a tails is due to happen next, just to restore balance to the universe. The harsh mathematical reality breaks that illusion instantly. The probability remains exactly 50% for the next flip, and the flip after that. The events are entirely independent. The laws of probability have zero memory. The feeling that something is due is nothing more than a biological hallucination. Take the math of that coin toss and lay it directly over your trading terminal. This fallacy destroys live accounts in 2 specific ways. First, it happens when you stare at an active, upward trend and short it simply because a pullback feels overdue. The second, far more dangerous manifestation happens after a losing streak. You double your position size because your brain is convinced a win is mathematically guaranteed to happen next. But the market does not remember your last trade. Past losses or profits have absolutely zero impact on your next setup. A true tradable reversal only happens when there is a valid technical or fundamental signal. It never happens just because your emotions demand it. Believing that the market owes you a specific move is a complete illusion. Allowing the feeling of being due to dictate your entries or your sizing is the fastest, most systematic way to wipe out a portfolio. To survive the markets long-term, you have to actively override those hardwired biological defaults. You do that by installing a rigid, rule-based system. Step number 1 is adopting probabilistic thinking. You must treat every single trade execution as an entirely unique, isolated event with its own probability of success or failure. Step 2 is valuing process over outcome. This requires the psychological discipline to detach entirely from the profit or loss of the trades you took yesterday. The goal is to execute your trading strategy mechanically, blocking any emotional input from altering the plan. Step 3 is strict risk management. Define precise entry, stop loss, and target points before the trade begins. In a live trade, these lines must never move based on hope or fear. If it hits the stop loss, take the loss. Committing strictly to an objective trading journal forces you to track cold data instead of emotions. It serves as the ultimate override to your brain's biological sabotage. Trading is an exercise in managing your own hardwired intuition. Long-term profitability requires the iron discipline to trust the math, exactly when your biology is screaming at you to trust a feeling. If you found these factual psychological insights valuable for your trading, consider subscribing to Trading Algo. Ignore the biology, stay disciplined, and trade.